Welcome to Stock Talk on May 24th. It's 5:39 p.m. Eastern Time. First, we're going to go through the markets, followed by commodities, and looking forward to all of your tickers, of course. So if you guys do find these videos helpful, be sure to share this video to your friends and family. And you can also subscribe to this channel to get up-to-date notifications on when I do post these videos that pretty much follow the markets every day. So let's take a look at SPY, which tracks the S&P 500 on the 180-day chart using the Thinkorswim platform. And let's just zoom in on these current horizontal channel that we've been making. We know that there is a support at 270 to 271, and we've made a box representing this support. Note that we do have a resistance around 274.10, but that the more time we kind of test this resistance, the more likely we are able to break the resistance at some point. Note what happened today, right? On futures last night, it actually the futures were down, over 100 points, and you guys can see that we were heading downwards, got kind of pushed up, and look at this massive tail candle that pretty much tested the support once again the early morning, this first 4-hour candle. Looking at the 1-minute chart, see how we tested 270, 271 again, only to get bounced back up. So pretty much the markets gave you guys another opportunity to go into those ETFs, or pretty much the stocks that kind of follow the markets. And what does this mean? Well, bullish streak continues, right? This is another test of the support. We've tested it once, twice, 3 times, now 4 times. Certainly it can go down 5 or 6 times, but the more time we kind of test the support and starts bouncing up, then we know that there's a greater chance that it can break the resistance at some point. The reason why we're bullish is because we know that the bearish to bullish overall trend on the 180-day chart has completely flipped. Note how we've been making lower highs until now, and all of a sudden now we're holding this horizontal channel above this major resistance, which is now pretty much gone right now. So we're not even basically talking about that, but I just want to tell you guys that this is a very bullish character at the previous resistance, which is now functioning as the new support. Looking at TVIX for volatility, I think people were in for another quick scare, I think early morning, but you shouldn't really be scared, because note how volatility fell another 1%. Early morning we did have a spike up, but try to go off of a SPY and what we've been talking about, and don't really look at TVIX, right? Volatility can certainly spike, but we do expect volatility to keep tracking lower as SPY continues to make and breaks those 273, 274, 275, 276, 277 marks. We do see volatility heading back down to a 180-day low. Looking at Forest Steel, which tracks crude oil futures. Now this is something that I think everyone was looking at today. We know that crude oil has been bullish, right? And that we pretty much got extended really heavily from this candle, right? Which was a reversal candle that continued back up. And now we're trending back down below the 20 EMA line shown by the light blue line. Note that we do have a support, and the support is actually situated pretty much, it could be situated here at 70.87, but one can argue that it's also situated at 70.42. So we're pretty much near the support area, and it is tracking lower, so we actually don't see a reversal just yet on crude oil, but we know that we are at the support. So if you guys want to take an entry position, if we're at 70.54, or if crude oil does fall to that area, that is a good place to start thinking about buying to GUSH, right? Because we're at the support. We do expect crude oil to continue push up, if not tomorrow, but sometime in the near future, because this doesn't look like a very definitive reversal area, right? Looking at the 1-year chart, you pretty much see the same thing, how we have came down in the past and pretty much bounce off the 20 EMA. We're once again at the 20 EMA, just we're looking for that bounce once again. Doesn't mean that it will happen, but there's a good chance that it will. If it doesn't, then we're looking for it to catch the 50 SMA, which is the blue line, right? This could act as another support. But for those, if you guys are waiting, you guys can take an entry position here and then go back up. If you guys are really cautious in terms of crude oil, then you could always wait until it starts reversing, then buy back in, right? You don't have to buy in right now. So let's take a look at the ticker GUSH, or GUSH, which follows crude oil. We do see this on the 1-year chart, how we formed this, this bearish candle, and now we're pretty much back at the support. Look at the 180-day chart, right? We're pretty much at the 50 SMA. This is why we think, at least I think, that this could be a good area to think about buying in. Should we start see a reversal back up? And I still think that it's a matter of time. It's a matter of when, but not if, right? So, but that's just my opinion, and this is just based off the trend that I'm looking at. And let's take a look at the 3-year trend for GUSH really quick. So recall that this candle has not completely formed, so this candle actually looks a little slightly worse than the candle we saw yesterday. This is why, because we are overextended over the 3-year chart, that we want to look for some sort of actual recovery in terms of GUSH before thinking about selling. So I still have my position in GUSH, and that's how it goes, right? So let's take a look at 4/GC, which tracks gold futures. So on gold futures, we know, look at what happened today, right? This is the 180-day chart, and we know that there was a support around 1286, and we did get a good push up from the support. So the question now is, are we able to start coming down to the 20 EMA, start bouncing off the 20 EMA, signaling that this is a new reversal area? So this is something to watch. I don't think we should go in right now, but if we do get to the 20 EMA, let's say it's at 1300, and we start bouncing off and goes to 1304 again, that's a good time for an entry point, because we can see that gold has a good good entry and a lot of room to make up. So that would follow the ticker JNUG or JNUG, which we've been pretty much tracking every single time. The reason why we've been tracking this is we know that gold has been making a higher low. We know that it's been holding a resistance around 1630, and we know that there's also some room to make up. So look at gold, right? I told you guys yesterday that if you guys wanted to buy in gold, yesterday would have been a good time, right? Because we were at the support, and you can set your stop loss really closely. So should you are wrong, you're able to get out very quickly. But should you be right, there's a lot of ground to make up. So there's JNUG for you. And then let's take a look at 4/NG, tracks natural gas. So natural gas, once again, right? Higher high, higher low. Natural gas is very bullish right now. You guys can see that how natural gas is trying to continually push up. And this is shown by UGAZ or UGAZ. And yeah, the reason why this is so bullish is we looked at UGAZ, which tracks natural gas, and that on the 180-day chart, this was the major resistance around 63.66. When we broke this resistance, look at this massive push higher, right? And the reason why we're getting this push higher is look how much room we have to make up. The next resistance that we can see is around 78.80. Right? It doesn't mean that it's going to get there. I mean, it might be $77 to $78, but there's still room to grow. We're only at 68.37 right now, and there's still room to go up. So this is another one that looks very enticing, at least right now. So thanks again for all of your tickers. Let's take a look at the 2 tickers that we closed the day yesterday that I promised you guys I'll look at. So the first one is actually TTWO, or Take-Two Entertainment Interactive Software. Sorry. So Take-Two Interactive Software, I actually was monitoring this one in the past. I was looking for that reversal, and the reversal ironically happened around here, right in this area, before now we're pretty much reaching its previous peak. Note that the previous peak was around $116, which is acting as a resistance currently. So what do you think? Do you think you guys should go in right now? So the answer would be no, right? We wouldn't want to go into this right now. Look how we try to make a double peak, and now we're trending below the 20 EMA. So it doesn't it doesn't have to fall all the way back down to the support. It doesn't have to, but it could, and start doing this horizontal channel until it breaks up. So we're not going to go in right now, because you can imagine how if we're trending under the 20 EMA, we can start getting a sell-off. We might retest this resistance, but again, your potential for profit is perhaps 3.5% maximum. Your potential for loss is over 10%, and I don't think that's a risk to reward ratio that you guys would like to go in. And same thing on the 1-year chart. You guys can see that what's happening right now. It's heading downwards, and we're heading to the 20 EMA. So let's not take a position right now. Okay, the other one was BLUE, or blue. So blue, I'm just looking at the 1-year chart right now. You can see that we do have a steady uptrend. Okay, let's look at the 3-year chart really quickly. Okay, so what do you guys think about this pattern? So the reason why I don't really like this pattern is because we had a massive uptrend, right? And then we held this reversal candle. Now we're going up. We did pull over the 20 EMA and we're making this higher high, higher low. It's just again, this is a question of, you know, your risk to reward. Your reward is maybe 10%, I think, maybe 13%. Your risk could be tied to around 6%, but this one can go either way. You guys can argue that, oh, it's going to go up and it'll keep going higher, but because we have this huge spike up and now we're kind of reversing and we're heading back near the top of the 3-year high, I really don't want to take a position, at least not right now. So let's see, it's bouncing off the 20 EMA. You can see it's bouncing. So yeah, I mean, you know, this is all these lines. You can see that the 50 SMA is crossing over these two lines, which is obviously a more bullish sign again. But for some reason, I'm just doubting that this one will get, you know, back to its peak at least. You could take a position around here, I think 184 if it gets down here, and then looking for a reversal. Look how we kind of caught the 50 SMA here. So it doesn't have to get all the way to the 50 SMA, but once it starts trending close, you could take a position and then make sure you set your stop loss. But I think short term is okay, but for a long-term hold, like a kind of really long-term hold, I wouldn't go into this one just because how it's been trending on the 3-year chart. Okay, hey Terry, can you look at KBR? So did we look at KBR yesterday? I'm not sure. Okay, I think we did these, right? Sorry. Okay, we looked at KBR yesterday. Let's look at Twitter. Hey David, welcome to the channel. So it got rejected hard off of its $34 resistance yesterday and bounced hard off of its 32.5. Bull flag or retracing the failed breakout. Okay. So it looks like Twitter has been, you see how these lines are all starting to point back up? This is a good positive trend that I'm looking at right now. Let's see the potential. So ask yourself, is the potential worth it to the risk? It could still go up, but to what degree, right? Where are you looking to sell? Let's say, are you looking to buy here and looking to sell here after 2%? If you're doing that, I would say, okay, I wouldn't mind. But if you're saying I'm buying here, I'm looking to sell up here, then I would mind that because that's not a very, reasonable trade because we can still see it come down, right? Because if you think that you can make 9% or 10%, which is certainly possible, but your risk gets higher and higher as it gets closer to that resistance. So I like the trend. It's just we're in the middle area. You can imagine, right? I usually make this box for you guys to kind of show where we are. If you guys are wrong, look how many candles are below this area, right? The majority of the candles are below this area. If you are right, okay, but that's a very minority portion. So we don't want to get into Twitter right now, at least for the risk to reward. Okay. Great value bleach. Oh, what? Can you go over CRSP? It looks pretty interesting. So CRSP is a therapeutics company. Generally, I don't want to go into therapeutics company because look how fast the movement is. As fast as it goes up, look how fast it comes down. So let's take a look at how much it dropped in the past when it gets overextended over the 20 EMA. It dropped 25%. I can almost argue that this is a good short sell opportunity. Once we do see that massive push down, that's the short sell opportunity that everyone's waiting for because look how much we're overextended over the 20 EMA and there's a lot of room to make up. 10%. Man, oh man. So put this one on your watch list in terms of short selling, but I would not go into it right now. I would look for the reversal. Oh, wow. That looks pretty enticing. Wow, that was okay. So we might have a reversal already. So this is one where if you think you can short sell, this is a good opportunity to take that chance and make sure you set your stop loss. But this looks pretty good in terms of reversal pattern. Okay. All right, so I'm just gonna do this one's the last one, and I'm gonna do these tickers. I know you guys called it a ton of tickers, and we'll try to go over some of those or more of those on the Sunday Stock Talk, but we're trying to limit these videos to a little shorter so that everyone can have the opportunity to kind of watch these whenever you have time. So looking at NOC or Grumman Corporation, this is the 1 year chart, and yes, we are pushing higher. So the next resistance area would be around here, 340. Man, it's not there. Yeah, that's not there. You can see that only goes up 3%, and we can easily get rejected really close around here. And then we're 3% down here. This is this area right here, you guys, right? 340, 339, 341. That's a really heavy resistance area, and we do not want to be there when it reaches there. So yeah, yes, it bounced off of the 200 SMA, and now we're trending back up, but we don't want to be there once it starts this starts acting as a resistance. We do want to see it to come back down, retest the 200 SMA, confirm that as a support, and then that time we would look for entry positions. I want to set my alert at 317.35. And once it crosses below 317.45, it'll give me an alert, and that's when I will revisit NOC to look for a entry point. Look at this massive sell-off based off of earnings. That is not very promising. There's some sort of news that came out that brought it all the way down. What percentage drop was that? My goodness. It's 13%. It's not too bad. So, all right. That's it for all these videos. I know you guys are calling out a lot. So, like Evan, you're talking about a ton of ETFs. Lewis, Henry, Raja, G Nestor, XJX, Trader Princess. I know you have a ton of tickers, but I'm just trying to limit to 5 to 10 tickers today. And I will try to go over all those on Sunday, 5 to 10 of those. So thank you once again for watching these videos. I appreciate all of your watches and all of your comments. Even though we don't get to all the tickers, I appreciate all of them. So I hope you guys have a good trading day tomorrow, Friday. Enjoy your Memorial Day weekend. I'll still try to post a video Saturday or Sunday or Saturday maybe, or even Monday. But enjoy the long weekend. You know, try to relax from the stocks and then get back into it next week. So I will see you tomorrow, Sunday, not tomorrow, for another Stock Talk. Thanks, guys, and see you later.